last episode of the series. To episode 5. Let's shoot. We have here, guys. This is the NFP week, the NFP day, right? 2nd of December 2022. Okay, so and this is where the NFP markup, this is where the news was released. You can see this very much huge momentum to the downside. But then I'm going to explain to you, why the market reacted in that manner. And we're going to be discussing the numbers here. Perhaps it may take a longer time, but we're going to achieve that. So looking at the previous day sentiment, guys, we're still off the sentiment that the market is worth. The market is bullish, all right? Still off that idea that the market is bullish. The lowest point and the highest point peak to the upside. So we're going to be using our Fibonacci tool to see some level here. Okay, fine. So right here, you can very much see how the market is playing, and because the market is still playing around this range, guys, on the upside, we're still expecting that the market somewhere, if the market gets up to this point or closer to here, we'll be targeting where the downside, the 38.0 fib level, in with an expectation that the market may react at any of these fib level, which definitely I am looking at where the either the 50, the 61, or the 79. I'm going to explain to you why I use those references in when we're sharing with you an exclusive content on Fibonacci sequencing. Okay, so I'm going to explain that to you guys without being an exclusive content, not part of the series, just an exclusive content. But before then, guys, let's see how we traded this market. So obviously, guys, I had the range here. I had the range because by my layman explanation of this, when I have a range here, I have this market, I'm expecting that the market will definitely trade within this psychological level, the zero fib level and the range, except it breaks out before, by at the opening of the next day before the London session or thereabout. But here we have here this move, which is very much internal on smaller time frames and all. So I was definitely waiting for price to react somewhere around here, resistance level. But then let me show you something very blunt. For price to have reacted in this manner, we had here definitely there's something that is called what, supply zones and all. We may have one around here, which that's why we saw price reacting around here, and then the zone was broken. But a whole lot of persons may want to trade that resistance zone or supply zones, turn demand zones when they are broken and all that. It doesn't really apply all the time, but technically you may also want to use that as some form of reference depending on other factors. So using this as a reference, guys, I'm still going to take the Fibonacci tool off. I'm still going to take the Fibonacci tool off. Okay, so I just have this reference. I put this reference here, place to watch, and then the 30 fib level, which I would have taken my profit off, and then I can take the Fibonacci tool off. So I have this. So right here within the internal time frame too, what we have here is what the lowest point. We have here the highest, seeing that the price was actually coming to the downside before the beginning of the London session. So we also have this reference here using our Fibonacci tool from the upside to the lowest point. And then what do we see here? Before the London session, we saw this, a bullish move, which we can't ignore. And then we got here, this was the London session. So technically, some persons will be seeing that, oh, the price is around the 79 fib level, I want to sell this market to the downside. But then we know that what we are trying to trade here is we're trading between psychological ranges and levels. And our target here should be either of these zones, either here, this 38 level where the market may likely come to react to, and here, this point. And which is closest? After this move here, maybe you want to lose the trade, but seeing this as what, a bullish hammer, this is a hammer candle, seeing rejection of this 50 fib level here. Guys, I'm still going to explain to you in Fibonacci sequencing why I use that 50, 61, 79 and how to tag them. But guys, let's go on a short break. We'll be right back and see how this market performed. This point there, you know, I didn't get into the market at this point. I waited for this bullish move, and it was at the 79.0 when the market came back to this point. That was when I entered a trade to the upside. I got off with just 20 pips off this market. Despite that, the full, I think, take care could have been 25 pips or 26 pips or thereabout. But then remember, guys, this is the NFP day. On this day, the NFP was released, and you can very much see this bold, bullish, bearish move that the NFP came with, right? So I was very much looking at the news release, and if you're wondering where I look at my news release from, guys, I'm going to explain that in very brief minutes, right? Now, on my Twitter account, I do have a couple of news outlets where I check and match the data with. Why do I use this Twitter account? Like, Twitter is more responsive. Like, you get this feeds almost the same time as they are released, right? Unlike when you have to go onto the website and you wait for the facts and everything to be uploaded. So I use what is called TweetDeck, so I can have a couple of pages. I may have shown that or shared that, but guys, I'm very sorry, I'm not sharing that right now. Okay, so the first news outlet I look at is investing.ng. Investing.ng. Sorry, my writing is bad. Investing.ng or investing.com. That's one of them. Then another one I also use is Financial Juice. But then I can have investing.com on one page, like on one column. TweetDeck actually puts different pages or different contents and columns, on your home screen of my system, my PC, of course. And Financial Juice, and I just have like three of them: Investing, Financial Juice, and then Forex Calendar, to compare. But then it comes out with almost relative data. But the major thing here is this: when the NFP was released, guys, the key thing there, looking at it on the whole view, it shows that the dollar is still strong. The dollar is still strong in that when the numbers were released, the numbers of jobs that were released, in the non-farm section, in the farm, in the NFP, the non-farm payroll, the numbers that were released was higher than what was expected or forecasted. Hence, the dollar remains was strong. So when the dollar is strong, guys, we're trading pound USD. We're looking at the pound USD chart. Definitely, if the dollar is strong, the pound will be weaker. So in that case, you could see that the pound fell. Now, guys, this is the technical implication. Now, at that point, guys, when all these things happened, this was where I got into the market. I got into the market at this candle. This was the candle. I got into the market here, and to be very honest with you, my take profit was here. Guys, I didn't wait for this whole move. My take profit was here. Now, why was my take profit here? Remember, guys, that when we started this section, I told you that this will be my target. Like, looking at this market for that day, that I will be targeting where either this level and this level, in the sense that the market actually, the highest point of the day was where? Was here. The highest point of the day, of the previous day, Thursday, was here. And then we had the lowest point here. And definitely with my concept and framework, I'm expecting the market to either grab liquidity or take out liquidity at any of these psychological levels using the Fib numbers. And we had here to be the range to 0, and this lines here, the lines here to be what? The 38.0 Fib level. And the market reacted around this is the 38. This definitely should be the 50, and this should be the 61. 61, between 61 and 79. But then I just took the closest psychological level, that's the 38.0, and that was exactly where I got my target. So I entered the market here at this point, and I got off the market with the whole NFP profit, 60 pips off the market. So guys, if you love this idea and this framework, don't forget, it's okay to subscribe to the channel, it's okay to like, and it's also okay to share your thoughts and concerns in the comment section. So guys, thank you for coming this far with us. Very much regards. See you in the next series.